Hi guys, welcome to my channel. My name is Hugo, and today we're going to see what's going to be the 6 stocks for this week. We're going to do a market analysis as well on my portfolio, so stay around. Before we start the video, please don't forget to hit the subscribe button. Only 6.2% of my viewers are subscribers, so don't forget to smash that button. So let's get back to the video. So you're going to start this week with the MPLX. I already spoke about this stock in my channel not a long time ago, actually the past quarter. They have a dividend yield of 9.09%. They actually increased a little bit from the last time. They pay quarterly February, May, August, and November, and they are undervalued 30%, so it's a really nice stock to buy. But we need to have in consideration one thing that we're going to see, which is the future growth, which is minus 5.1%. The ex-dividend date is on the 10th of November, so it's going to be a little bit tight because we don't have more than 2 days, so we can process the order. So that's why it's going to be risky if you're going to count on buying it right now and then receive the dividends. You may not receive the dividends because of the time. So it's something that you need to put on your watch list and be careful, because usually I do 3 days before the ex-dividend date, not 2 days. Sometimes it's a bit tight, and then we're going to ask for the eToro to see if the stock was actually processed, and it wasn't processed in time, so we don't going to receive the dividends. They have a financial health of B, so they have more liabilities than assets. The assets is around 1.5 billion, and in terms of liabilities around 2.7 billion. Is not much, but there's still a bit of a difference between liabilities and assets. That's why they have a B. The market sentiment, it's a buy, and the future growth, as I mentioned before, it's a minus 5.1%. They went a little bit up in the past week. As you can see on the graph, they have around they are still undervalued 30%, which is good. If it's a stock to buy, yes, it could be a stock to buy, but it's something that to be a long term, not a short term, because of the future growth is negative for the next upcoming year. You need to have this in consideration. So this is a stock that you're going to have on your portfolio for a longer time, as I have for BT and Chevron, for example, which are quite similar to this one. The ticker HTGC Hercules Capital, it's a new stock that I found. I never saw this stock before. Actually, I had to dig a little bit more. It's kind of similar to Main Capital, Street Capital. They have a dividend yield of 7.38%, which is good. They pay quarterly February, May, August, and November, and they are undervalued 17.3%. The ex-dividend date is going to be on the 9th of November, so you're not going to have time to buy this one. It's something that you need to add to your watch list. And the financial health is 2G, so they have more assets than liabilities, around 267 million to liabilities of 37 million. So it's quite low in terms of liabilities, and they have a really good cash flow. So it's a good stock to buy, but you need to have in consideration the future growth is going to be 11%, minus 11%, which is not great. The market sentiment is a buy. We have he went down a bit this week, but they're still undervalued 17.3%. If the stock was undervalued in around 30% or more, probably I'll go with the future growth so negative. In this case, this is something that we need to be careful, because the stock may go down a little bit more in upcoming months or years. The ticker ABR, Arbor Realty Trust. This is one of the stocks that I already spoke on my channel as well. They have a dividend yield of 7.33%. They pay quarterly February, June, August, and November, and they are undervalued 1.1% only, which is not great. Having in consideration they actually went down, they are still undervalued 1.1%. They actually were overvalued in the past, so I'm assuming the stock may go down a little bit more. Beside the fact that they only have a future growth of 2.5%, but I think they're going to be a little bit lower in the next upcoming months. So it's going to be quite risky to invest on this, because it's only undervalued 1.1% and the future growth is 2.5%. But having in consideration the previous one, I'm more keen investing in this one than the previous one. Although this is a mortgage REIT, and I already have another REITs on my portfolio. Although in terms of risk, this is a lower risk than the previous one. We still are undervalued. 1.1% is not much, but we have a positive growth of 2.5%, and they went down quite a lot this week. The ex-dividend is going to be on the 12th of November. we still have time to buy this one, and we have a financial health of 3G, meaning that in terms of liabilities we have around 1.8 billion, and in terms of assets around 11 billion. So they have a really good health, they have a lot of cash flow, and the EPS is also positive. Therefore, this is a better investment than the previous one that I mentioned. But for me, I'll see what's going to happen to this stock in the next upcoming months, if it won't go lower than the value that is at the moment. The ticker XOM, ExxonMobil Corporation, is already well-known stock that I spoke in this channel a few times. They have a dividend yield of 5.46%. They pay quarterly, February, May, August, and November. They are on value on 10.8%. The ex-dividend is going to be on the 10th of November, so we're not going to have time to buy this one, but it's something that we need to put on our watch list. And the financial health, it's a B. In terms of assets, we have around 52 billion, and in terms of liabilities, around 62 billion. The market sentiment, it's a buy. They went up and down in the past few months. Actually, this is due to the oil and the crude went up a lot in the past few days, and then went down, and then it's coming up again. But still, we have here a future growth of 5.5%. So this could be a good stock to have on our portfolio if you don't have any of the others, like BP or Chevron, for example. The ticker IBM, International Business Machine Corporation, they finally had an increase on the dividend yield. It was around 4.9% in the past, and they now have 5.16%, but this is also due to the fact that the stock went down quite a lot and the dividend yield payments stayed the same. So they pay quarterly, February, May, August, and November. They are undervalued at 47.3%, so it's really nice to buy. It's much better than Microsoft or even Apple. In terms of dividend yield, of course. In terms of growth, it's a completely different story. The ex-dividend date is going to be on the 9th of November, so we're not going to have time to buy this one, but it's something that we need to have to our watch list. In terms of financial health, it's a B. They have around 29 billion in terms of assets, and in terms of liabilities, around 35 billion, so therefore it's a B. The market sentiment, it's a buy, and the future growth is around 13.9%, which is quite good, so we have plenty of, I think this, in terms of, we'll combine two things. One is the dividend yield, and also the growth that we're going to get here, around 13%. And since they went down quite a lot in the past few days, as you can see there on the graph, it could be a really good investment. Even if you don't buy it to get the dividends now, you can get the growth for the next upcoming months. Last but not the least, we have BP.L, British Petroleum. They have a dividend yield of 4.61%. Actually, I've included this one because besides not being more than 5% of dividend yield, after tax, this is going to be more than actually the other ones, because the other ones with 30% of tax on it is going to be lower than actually this one. So that's why I've included this one, because it's a UK stock. They pay quarterly, January, April, July, and October. They are overvalued 13.5%. The ex-dividend date is going to be on 11th November. We do have time to buy this one, but I don't think that's going to be a good investment because they are overvalued 13%, and the future growth is going to be only 0.2%. I think it's much better to go for Chevron, for example, than this one. Although I do have this stock in my portfolio, and I don't have intentions to sell for now. I'm hoping to increase in the future. But having in consideration, if you're going to buy it right now, I think it's not going to be a good investment because of the overvalued and the future growth. So I'll put this in my watch list, and I'll see what's going to come in the upcoming months. If they go down, probably January, usually the market goes a little bit down. We have a dip, so I'll wait for that time. So now let's have a look into the market and the Bitcoin. So in terms of the SP500, we're going to have an increase of around 1.6% in the next upcoming week. We're going to have long positions above the $4,633 with targets around the 4,720, probably extension to the $4,750, but probably that's going to be a little bit stretch. So I'll be more conservative for the $4,720 instead of the extension. In terms of alternative scenario, is going to be trade below the 4,596, so that we have here two support lines, and probably could go down, but I don't think this is going to be the targets as an alternative scenario, because we already have here a really good support and a really good consolidation. So in terms of the RSI, we are still trading below the 9 days medium average, which is going to be good, meaning that we're going to have a really potential growth of the next upcoming week, being the next resistance of around $4,720. For the Bitcoin, we're not going to have really good news. We have downtrends, as you can see here on the MACD, and the RSI, it's trading below the neutrality around at the 50. The MACD is negative and below is signal line. The configuration is still negative for the next upcoming week, although it's still trading below the 20 to 50 period moving average around the 61,596. So, and this is going to be our breakout. So we may see a fall of 2,000 to 3,000 pips in the next upcoming week. We see here a resistance of around the 63,000. If you're going below that point, I don't think so. This has all the configuration to go and reach the next support of the 58,000, and probably depends on what's going to happen to the market as well. And seeing that we are trading below the moving average on the 20 days and the 50 days, and the MACD signal is also a negative signal, I don't think this week is going to be a positive week. We may be around the 60,000 to the 59,000 during this week, so we may going to see a decrease on the Bitcoin. So if you want to copy all my trades, you can do it by go to eToro and copy all my open trades. That's what I recommend, with a minimum of around $1,000 to $5,000. That's going to be the best for your buck per se, because there you're going to receive a lot of dividend yields, on which my portfolio consists of around 75% of dividend stocks, and the other one 25% of growing stocks. But I'm going to show you this right in a few moments. The portfolio performance, comparing with the market, we had a slight decrease. This is due to the Bitcoin. They went down a bit, so, and my portfolio went a bit impact on that. Also, I had a really big impact due to the Chinese market and also COM, but that's going to be another talk for another day. Probably I'm going to do a video on that later on. Let's see. The US market went up around 1.5%, and my portfolio went up around 1.43%, so a little bit below the moving average. The portfolio, in terms of loss since inception, is around 14.77%. This is not here considering what I've already sold and bought. This is the overall since inception, but there's more here that's not being shown. That's going to be only at the end of the year. Probably I'll do an update on that. In terms of the last 12 months return, we have an increase of around 1% from last month. We are now at the 40% mark, 0.33, which is good, having consideration that I wouldn't expecting to have this increase for this year. Actually, I was expecting to have around 10%, 15%, and this in the 12 months was a really good increase. The top gainers were Pfizer with an increase of 9.6%. So we have AIG with an increase of 5.46%. COM with an increase of 4.79%, but bear in mind they went down around minus 25%. So I'm still on the minus 20% at the moment. I have done some average, but I'm going to talk that in a few moments. In terms of Main Street Capital, we have an increase of 3.47%. Disney had an increase of 3.8%. The losers was Alibaba with a decrease of 3.43%. The ETF MSCI had a decrease of 1.72%. Activision had a decrease of 0.72%, but this was actually a good investment for my point of view. They actually went down around 9%, and I bought in the dip, and I'm going to have a return around 2 to 3%. In terms of Walmart, had a decrease of 0.72%, and the ETF SDIV had a decrease of 0.46%. In terms of other performance indicators and actions, we have payments of AMZA, R, T, GNQ, HIG, and PFF. The new acquisitions was Activision, when they went down around 9%. We have now open orders with R and QYLD. It's misspelled, but it's QYLD. We have we didn't close any orders for this week. We did done some averaging on the AT&T and Com because they went down quite a lot, and I want to do some average there. The top payers is still AMZA, and the top dividend yield is still QYLD with 11.8%. The portfolio is still undervalued in 47.4%, so we have a slight increase here of 4 points from the last week. And in terms of the future growth, we had here increase as well from the 7% from last week to 9.7% of this week. This is due for some stocks went down a bit, so that's why. And I had here another two things, which is two good decisions that I've made and one bad decision that I've made. And this good decision was AT&T, which AT&T went around 0.35% up, and Activision around 2.20% up. So, but you can see that on my portfolio if you want to check that on eToro. In terms of bad decisions, was when I bought the Com, I bought with around minus 9%, but they went down around minus 10%. So that was actually the difference, that how much I've lost was around 2% so far. But I'm hoping this stock is going to go up in the next upcoming months, having in consideration the performance they have and the future implementations that they're going to do in terms of the 5G telecommunications and the broadband, etc. So that's going to be, I think, is going to be a bad decision, not quite. I think it's going to be a good decision in the next upcoming months. So now let's have a look into the spreadsheet. So if you are seeing this spreadsheet for the first time, you can have a look into the description. You have a link there, and you can simulate. So if you invest here, I have 10,000, but you can put 5,000, whatever. It's going to change the values, of course, and will as well change the values and how much you're going to receive per month and per year. So for this week, we have payments of AT&T, we have payments of GNQ, we have payments of PFF, and we have payments of HIG, and also we have here the new acquisition of Activision. So this line now it's new. This graph here has a full view of how much you're going to receive per month. So there's some months here that you're going to receive more. And here we have my portfolio diversification with a balance of around 2.3%. Chinese stocks around with 4.7%, crypto around 4.7%, UK stocks around 9.3%, ETFs around 20% and 0.9%, and in terms of US stocks around 58%. In terms of dividends versus growth, so my entire portfolio has around 73.8% of stocks with dividends and 26% of stocks with future with growth, which you can see it here. So these are almost growth stocks, which doesn't contain any dividends, and here are all the stocks with dividends. Some of them I don't consider quite. So for example, Activision, it's a growth stock. I don't consider a dividend stock because they only pay 0.61% and they only pay in on the month of April. Okay, so once again, I hope you enjoyed these tips for this week. Don't forget to hit the subscribe button and the like. That's going to help me to reach the 1,000, which I'm hoping. And once again, guys, thank you. Cheers and have a nice week. Bye.